Good morning and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Today we are streaming from the mining farm and my new studio setup, so bear with me while I set everything up. I don't quite have all of the sound deadening completed, so there's a little bit of echo, and I'm going to go ahead and apologize for that up front. Today, though, we do have a show for you. Whether it's an exciting show or not, I guess we'll figure that out. But it is starting to appear that Bitcoin is not correlated to the stock markets, and it is less volatile than the stock markets. We've been pointing this out for the past 6 months. Since June, this has been true. However, it appears that everybody else was still saying that it's correlated with stock markets. But finally, we have an opinion piece from CoinDesk that agrees with us. So we're going to go over it and check out that opinion piece. Other than that, we're also going to be talking about Litecoin mining difficulty is hitting all-time highs. This is primarily due to the fact that, well, the Litecoin miners, the script miners in particular, are, at least in my humble opinion, the best ones out there for profitability, and they merge mine. So I think seeing the new all-time high in difficulties on Litecoin makes sense, because obviously you have the high difficulty on the Dogecoin as well, which is primarily what's being mined in this case. Now, Binance is to sell the rest of its FTX tokens, or it has started doing that, as Alameda CEO defends firm's financial conditions. Now, I am starting to see reports as well on Twitter, but this is an evolving story. So this story is going down right now. FTX appears to be in some sort of trouble. Bitcoin withdrawals on Twitter are being reported as halted. We're going to be monitoring this story, obviously, throughout the stream, but this is not looking great for FTX as it sits right now. CBDCs may need global regulation, as far as that is what the EU commissioner is saying. We're going to get those thoughts and talk about that. And Bitcoin miner Hive blockchain holds $68 million of Bitcoin and has no debt costs on equipment. That's sounding really good, like the best miner currently out there. Of course, there is Marathon Digital that we've been talking about as well. Let's get into all of that and more, including, of course, mining profitability and miner releases, etc. New releases near the end of the show, right after a word from today's sponsor.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like Hive OS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
Welcome back, ladies and gentlemen, boys and girls. So first things first, Bitcoin miner Hive blockchain has sold $68 million of Bitcoin and has no debt costs on equipment. Obviously, if you're currently in the bear market and you are a miner, this is the preferred position you're in. Hive blockchain, or to be in, excuse me. Hive blockchain is bucking the bearish mining industry trend, holding $68 million on Bitcoin while producing 307 Bitcoin in October. Canadian Bitcoin miner Hive blockchain has 3,311 Bitcoin worth $68.8 million US, according to a production report released on Monday. The report also revealed that Hive has no debt servicing payments in relation to its digital assets or mining hardware, even as several rivals are feeling the squeeze of the bear market. London-based Ergo blockchain, ARB, is searching for a source of liquidity after a $27 million deal collapsed last week. While in North America, Compute North, one of the largest operators of crypto mining data centers, filed for bankruptcy after owing as much as $500 million to at least 200 creditors. Core Scientific also warned that bankruptcy may be on the cards as it claims to raise capital. Hive mined 307 Bitcoin in October at an average of 115 Bitcoin per exahash. Quote, "We are very happy to be producing over 300 Bitcoin per month, which is about 1% of the global network, even when network difficulty isn't at an all-time high. We have sold all of our Ethereum holdings. In October, we produced an average of 9.9 Bitcoin per day," end quote, Executive Chairman Frank Holmes said in the statement. And obviously, like I said at the beginning of the show, if you are looking at currently at like the miners that are doing the best, looks like it's Hive and it looks like it's Marathon. I believe it was Marathon Digital that are both doing pretty well. The rest of them seem to have tried to expand too quickly, ended up not getting, their equipment in time. Here's what I've been talking to a lot of people about in the industry as it pertains to building out like mining farms in general. And this is not necessarily at the home level, but I think it applies to the home level as well. And the idea is that during the bull run, you really want to be starting to source, large electrical upgrades, large power upgrades, that sort of thing, and investing from that perspective. And then preferably, once you are in a bear market, you have the capability of moving in all of the miners and purchasing all the miners that are basically getting, sold for a lot cheaper than they were during the bull run. At least that is the investment plan if you're looking at upgrading during, of course, like a bull run versus a bear market. Bear market, you buy the equipment. Bull market, you buy the housing of the units, right? The data centers, the power costs and whatever. Obviously, a big key here, though, is trying to play that power agreement problem, right? So this is kind of when you're talking about in a bull run, what it looks like profitability compared to what, you're going to pay in power, it's not going to look the same in a bear market, and trying to predict what your power cost needs to be during a bear market is going to be pretty rough. That being said, of course, you do get advantages for things like utilizing a lot more power, utilizing more power that's renewable, that sort of thing. So there are avenues to, have these discussions with different power companies and different providers and so on. Trying to get behind the meter, obviously, is a huge benefit as well when we're talking about this. But all in all, Bitcoin miner Hive being at the top here is looking really, really good. That being said, CBDCs are not looking so good, because here's the deal. Not only do they want to have CBDCs, central bank digital currencies, for the uninitiated, which are essentially cryptocurrencies controlled by a federal government or a nation state, and that just depends on which nation state you're a part of. But now they want some sort of global regulation surrounding this as well. So start centralizing the power and the control around CBDCs even further. Paolo Gentiloni says a series of international agreements may be needed to stop state-backed digital currencies from infringing on countries' sovereignty. And this is kind of interesting. So I think the current play, and it sounds like, and this is kind of where things will get a little bit interesting, is that there's been basically two theories I've been talking about for a while, because central bank digital currencies centralize the control of the currency underneath the federal government, and it pulls away from the banks. So what I've been saying here for a while is that what we will see, I think in general, is banks fighting the central bank digital currencies, right? So your first line of defense to maintain like some sort of sovereignty as it pertains to financial, right, is that you will have these banks that are going to fight against central bank digital currencies because it's going to hurt their business. That being said, of course, anything that when it comes down to, tax returns, Medicaid, any sort of disability, government pay, as far as if you work for the government, it sounds like at this point, at least on the US side of things, is going to go directly through some sort of central bank digital currency or a similar system. We have FedNow in testnet as we speak. It started in October, and that's looking for a pretty early launch in June of 2023, which is absolutely baffling to me that it's that close. But a system like that will be utilized to essentially say, hey, you want your tax return, download the FedNow app and we'll dump the tax return to you. And I think that takes a lot of the money flow out of the banking system, and I think the banks will not like that, right? So when we're talking about what will kind of be that first line of defense against CBDCs, I think it will be banks. But then once we get past that and we have a central bank digital currency, and then essentially move into like a central bank digital currency that is international or global, then you have states' rights and or country sovereignty, right? Specifically, not states' rights as it pertains to the US, which we could talk about that as well, because that's going to be a big deal too. But when we're talking about countries and maintaining their sovereignty, especially when it pertains to CBDCs, they're going to want to put in some regulations. So then you kind of have a stopgap there. One of the books that I think like you should read that will give you kind of an idea, I think, of like where the philosophies come from for all of this would be the Sovereign Individual, right? And I've talked about that book in the past, and it goes over kind of what is being slated, at least in the book, as the digital transformation. And it talks a little bit about kind of the idea of currencies and how this will be consolidated and the dissolution of the nation state and so on. But once again, when we're talking about central bank digital currencies, what we're kind of talking about, or there are stop gaps there, is the banking system, right? And then, of course, at the end of the day, countries will kind of push back against that. And I think that's kind of what we're seeing here. Central bank digital currencies may require a network of international deals to stop state-backed money from infringing on other countries' sovereignty, European Union Commissioner Paolo Gentiloni said on Monday. The bloc of 27 nations is considering a digital version of the euro, but needs to resolve issues such as how a digital euro will work for cross-border payments. And this has been an issue that I've heard a lot of discussion on. Now, I don't have any confirmation at all on how this would work, right? I've just heard basically what I would call theoretical discussions on cross-border payments for CBDCs. That's the best way I could say it. So take this with a grain of salt. This is hearsay. This is not fact by any means. I want to make that clear. But the idea is this, is that essentially no country could trust any other country on a proof of stake currency. So therefore, for cross-border payments, you would need to have some sort of proof of work currency, which means that a lot of countries may end up moving into the direction of having a hybrid model where you end up having proof of stake as your internal consensus mechanism between, citizens and the government and whatever businesses are within, of course, the jurisdiction of that government or operating within the jurisdiction of that government. And then for cross-border payments for interactions between, like, let's say like the US and the UK, you would have some sort of proof of work version of that would be immutable, and that would allow the countries to trust each other for the cross-border payments. And this is kind of like the theoretical, discussion going on behind the scenes when we're talking about implementing CBDCs and how they would all interact with each other on a global basis, right? So this is kind of really interesting things that are going on right now. And I think we're going to start seeing more discussion of it at these higher levels, right? Like we're seeing now. So it goes on to say, quote, how do you avoid the risk of infringing the sovereignty of other jurisdictions through a digital currency while developing a digital currency with global ambition as the digital euro will be, said Gentiloni, who is responsible for economic policy at the European Commission. The EU's executive arm. Gentiloni was speaking at a conference on the digital euro organized by the Commission and the European Central Bank. But this, of course, brings the possibility of specific agreements with other jurisdictions regulating this kind of dimension, end quote, he added. In October of 2021, the group of 7 major industrial nations warned that countries that are developing digital versions of their fiat currency need to be wary about treading on other jurisdictions. And here's the thing. We also heard about this with regulating essentially your stable coins, right? So just here recently, what we had was the UN come out and say, hey, we need to regulate stable coins because it's allowing countries that we're like kind of intentionally wanting to collapse their economy of. Well, it's allowing the people within those countries to go ahead and opt out by basically using cryptocurrency to purchase the US dollar and protecting their investment. And we saw this in Argentina most recently. And obviously, like, it appears that this is something that the powers that be, whoever, you want to point at, whether it's in this particular case, the UN, previously with Argentina, as they observed it in their particular terms that we've covered on the channel. And then, of course, now the European Central Bank. These are the kind of pushbacks you're going to see over and over again, right? And like for good reason. It's because there is control being lost here, right? Control is being lost, and so it's going to be extremely uncomfortable. And so there's going to be pushback from these large entities, whether that be a bank, whether it be the United Nations, whether it be the US government, whether it be the FBI, the CIA, or whatever. There are going to be pushbacks when power is being lost or pulled away due to some new technology. This has always happened throughout history. To what extent may be a little bit more difficult to determine, right? The International Monetary Fund has also raised the possibility of an international CBDC platform that could ease cross-border payments, but that is now beset by delays and costs. Gentiloni's remarks at a conference in Brussels drew an immediate response, including from the Bahamas, one of the few countries that has already rolled out its own CBDC, the Sand Dollar. Quote, it is critical that any cross-border initiative taken in regards to the work on CBDCs reflects an inclusive approach to the needs that will be expressed by the Bahamas and small countries in this area, end quote, John Rowley, governor of the Bahamas Central Bank, told the conference. So this is something we're going to have to pay attention to. There could be an international CBDC platform for sure. And I think what that would end up being would be some sort of hybrid. Also, I wanted to wrap it back around to that hybrid on a theoretical form. If you ended up having a proof of work for cross-border payments, that would be a licensed thing. So you wouldn't be allowed to operate on the network without a specific license that was provided to you by said federal government or international entity that governs that, right? So don't think that like as a miner, you can just turn back on and call it a day, right? That's not going to happen. Not going to happen, my friends. We got to actually fix that over here in a little bit, but it's fine. It's fine. It's actually running. Test bench. So that's going to cover that. I think it's a big, important topic to be covering, and so definitely pay attention to it, and we will kind of move on from there. Binance is to sell the rest of the FTX token holdings as Alameda CEO defends firm's financial conditions. Now, Alameda's CEO offered to buy Binance's FTT token holdings for $22 a piece. Now, this is a developing story, and I wanted to show you guys here, I believe, what they've said now. Basically, Sam Bankman-Fried has said he denies any insolvency rumors due to this. And then I believe earlier this morning, we also heard a report that... Anyways, he says there's no insolvency. I thought we had one more. Binance was dumping tokens, or has started dumping tokens already. And then on top of that, I've been hearing reports as well. I'm trying to get confirmation on these reports that Binance has basically started essentially, or not Binance, FTX has stopped withdrawals as well for some people. And then there's an entire thread as well from SBF FTX, which we'll check out here in a second. So let me get that over here for you guys. I believe this one right here. So let's try to parse this out. Like I said, this is a developing story, so it's going to be a little bit different to follow, okay? But Binance is to sell the rest of the FTX holdings. Let's get into it. Binance's CEO responding to a CoinDesk scoop about trading firm Alameda Research balance sheet tweeted Sunday that he will sell the remaining FTT tokens held on his books that he took as part of his exit from Alameda's sister company FTX last year. Binance CEO Changpeng Zhao did not say how much FTT his firm will sell, but that as a part of the cryptocurrency exchange's exit from FTX equity last year, Binance received roughly $2.1 billion worth in the form of BUSDs, Binance stablecoin, and FTT. Alameda's CEO, meanwhile, tweeted that her trading firm's financial condition is stronger than what was reflected by the balance sheet CoinDesk wrote about. She also offered in a reply to the Binance CEO's post to buy his firm's FTT token holdings for $22 each. Speculation over the FTT token led to an extreme price volatility amid the back and forth Twitter exchange. In his initial tweet, CZ said Binance's sale would be executed in a way that minimizes market impact and could take a few months to complete. Blockchain Explorer Etherscan showed an address moving 23 million FTT, worth approximately $530 million, to a Binance exchange wallet Saturday afternoon. The price of FTT declined 14% over a 24-hour period to $22.02, its lowest price since June, according to CoinMarketCap. And then at the time of press, the price of FTT rebounded to $23.03. CZ's announcement comes after rumors swirled about the financial health of Sam Bankman-Fried's trading firm Alameda Research after a leaked balance sheet reviewed by CoinDesk revealed the trading firm owed $5.8 billion worth of FTT tokens, including FTT tokens pledged as collateral as of June 30th. Alameda was revealed to have $14.6 billion in assets and $8 billion in liabilities, including $7.4 billion in unidentified loans. So obviously, if you essentially have 6.6 billion and then you already owe 5.8 billion, then they feel like that is pretty rough. On Saturday, Alameda Research CEO Caroline Ellison responded to the rumors by tweeting that Alameda had over $10 billion of assets not reflected on the leaked balance sheet. Ellison added that Alameda had undisclosed hedges in place and had already returned a bulk of their outstanding loans. CZ added that the sale of Binance's FTT holdings was not to be interpreted as a slight against the competitor's exchange. Quote, "We typically hold tokens for the long term, and we have held onto this token for this long," tweeted CZ. "We stay transparent with our actions." Now, SBF did respond via a Twitter thread and then said, "A competitor's trying to go after us with false rumors, and FTX is fine. Assets are fine." It says that FTX has enough to cover all client holdings, and we don't invest client assets, even in treasuries. And it says, "We have been processing all withdrawals and will continue to." So my worries about earlier this morning seeing withdrawals not being processed appears to be incorrect, but it does say the withdrawal speed has slowed down, I believe, because a lot of people are withdrawing. So the BTC withdrawals, churning through them, node is throughput limit. So they're switching it to process from both ends, which should help speed it up. And then the stablecoins processing, banks are closed for the weekend, though USD stablecoin creation redemptions might be slower until wires clear tomorrow, especially for some coins and chains. So it's important to be paying attention to all of this stuff that's going on. So they say it's not affecting it, but it doesn't matter basically if they have enough to cover it all, because what matters is the amount of demand on the network. So there's a loss of faith in FTX right now. And because of that loss of faith, people are pulling Bitcoin out, and that is slowing down the network. And that is really what's happening here at this point. So believe the people that are saying they're having issues with withdrawals. This is probably true. There are probably people having issues with withdrawals for Bitcoin. Should it be an immediately like, oh no, FTX is completely failing? Not really, because obviously, as they said, they have enough to cover all of basically the withdrawals. So I wouldn't really worry about it from that perspective. But of course, speed of getting your Bitcoin out is going to be slower. That's why, we'll go back to it. Not your keys, not your crypto. An important lesson here. If you are leaving a bunch of assets in centralized exchanges like FTX, or even one that's performing well right now, like Binance, you need to be concerned and consider, getting yourself at least a hardware wallet like a Trezor or a Ledger, and start learning to utilize it and start custodying your own cryptocurrency. I know we harp on this all the time, but these are the reasons why. FTX could be completely solvent, completely fine, have enough to back up everything that's, within their accounts, but the network slows down and you can't get it out of the exchange, or something breaks at the exchange that's unexpected. And that's kind of on you. Once again, the hard part about decentralization in general, and this doesn't just come into play with finances, but with everything, including, access to, let's say your library information or whatever, is that it requires personal responsibility. And we are requiring personal responsibility in a financial revolution at a time when our society does not value personal responsibility. So it's kind of one of those things where it's, you feel bad for people because they've been trained improperly. They've been conditioned by society to basically lean on the government or a third party to manage their finances, and they end up losing, some assets because they don't know how to self-custody. And it's just, make sure that you're taking control of your keys, right? I mean, that's really it at the end of the day that I really want to make sure that you guys understand. So let's go ahead and talk about more, and we'll get into questions and answers, of course, at the end of the show. So Litecoin mining difficulty is hitting new highs, the foundation says. The network's mining difficulty peaked on Friday, indicating increased competition for miner rewards. Now, as you guys may or may not know, for the uninitiated, we'll go ahead and go over this, but essentially every proof of work coin has something known as difficulty. Difficulty is an adjustment to how hard it is to mine on any given network, whether that be Litecoin, Dogecoin, Bitcoin, or so on, right? Ethereum Classic, whatever it may be. And it is directly correlated to the amount of hash power on the network. Hash power being, of course, the amount of miners that are on the network. So the more miners that are on the network, the difficulty adjusts and goes up. So basically difficulty going up is an indicator of the amount of hash rate increasing. Now what this does is this does create kind of an economies of scale issue in the cryptocurrency mining realm, where if you're a miner and you basically don't increase the amount of hash rate and decrease the amount of power with upgrades, you end up in a position where you are at a disadvantage when the difficulty on the network goes up. So anybody that's been mining, for example, Dogecoin and Litecoin with old equipment like L3 pluses, X5s, and so on, well, you're going to be at a disadvantage as more mining companies start to deploy the newest and latest and greatest Antminer L7, for example. And that is because they will be able to get more hash rate for less power and increase the difficulty on the network, therefore, decreasing the payout of the older miners and therefore reducing, of course, the amount their actual margin, right? So the amount of power they use to the amount that they're spending to the amount of actual coin that they're getting in. Now, that being said, too, this is a unique case. So when you hear Litecoin mining difficulty is hitting new highs, you need to understand what is actually happening here, because what it's going to be sold to you as, right, or what it's being sold to you as is potentially success for Litecoin. When in reality, what you're seeing is Litecoin basically being kind of the secondary coin at this point, as opposed to what it used to be, which was the primary coin, in a process that's known as merge mining. Now, we've gone over merge mining on the channel and how to do it, so you can definitely check that out. But essentially what merge mining allows you to do is take any script miner, any miner that runs on the script algorithm, which is the algorithm that is utilized to mine Litecoin, and mine two coins at the same time. In this particular case, the coin that is getting mined along with Dogecoin is typically going to be Litecoin. So people are deploying miners to mine Dogecoin right now because of the new increased profitability. And yes, the difficulty on Litecoin is going up, but not because of the merits of Litecoin, more because of the pump of price of Dogecoin due to, of course, the purchase of Twitter by Elon Musk. So don't get confused and think that Litecoin is going to skyrocket because the difficulty is going up. It's just a secondary means of income for a miner that is already deployed a script miner to mine Dogecoin. Now, there are other options people haven't been swapping to that should be paid attention to as well. If you're mining a script coin with an ASIC at this point, consider the fact that right now, if you look at mining profitability, it may be advantageous to swap off of Litecoin and onto Digibyte for your secondary coin to Dogecoin. So these are all the caveats that I want to give you guys. Litecoin mining difficulty is at a new high, peaking at just under 18 million hashes, according to a post by the Litecoin Foundation on cryptocurrency market data site CoinMarketCap. Mining difficulty measures the average number of hashes to require or solve a block. We already covered that for you guys. The increase in Litecoin mining difficulty likely means the competition for miner rewards is heating up, and that is true. The cryptocurrency, sometimes referred to as digital silver, also has a halving event on the horizon. Now, that would be something to pay attention to that will influence the price of Litecoin, by the way, but not necessarily the difficulty going up. When Litecoin was launched in 2011, miners received 50 Litecoins for successfully mining the block. That reward, called a subsidy, is halved every 840,000 blocks, roughly every 4 years, just like Bitcoin. The third halving takes place in 2023 and reduces the current 12.5 Litecoin subsidy to 6.5 Litecoin. The price of Litecoin is holding steady, trading at $68.04 at the time of publication. However, on Wednesday, Litecoin's price spiked 13% in a single day, probably due to payments giant MoneyGram's announcement that its U.S. customers will soon be able to buy, sell, and hold Litecoin, Bitcoin, and Ether in the MoneyGram mobile app, which we talked about last week, I think on Twitch, though, not on YouTube, to be fair. So there's the reason for the earlier pump. Here's kind of my thoughts as far as like when you're seeing the difficulty going up and why it's going up. I think it's more related to Bitcoin than it is to the MoneyGram and Litecoin personally. And then the kind of other play, which is, you know, if you're going to merge mine, maybe hop off of the demanding network for your second coin and hop onto a less demanding network, or, you know, a network that has less difficulty on it. Finally, we have an opinion piece here, and that is that Bitcoin, magic internet money, again proves less volatile than stocks. The Federal Reserve stirred up markets last week, but Bitcoin was less reactive than plain old stocks. After the smattering of U.S. central bankers who set the Federal Reserve interest rate benchmark met last week, the smattering issued a press release that outlines their new monetary policy, raising rates by 75 basis points. Then Powell, who leads the smattering, speaks at a press conference, giving introductory remarks before he answers questions from financial journalists. In our modern era of information overload, the market tends to react to press release and then to the introductory statements and then to the answers to the financial journalists' questions. So imagine my annoyance during last Wednesday's November edition of the Fed Policymakers Change Rates, and then Powell talks about it. Just look at the S&P 500, which tracks the performance of most of the U.S. stock market and how it behaved during the afternoon's proceedings. It went up with the press release and down with the introductory statement, and then down some more amid the questions from the press. Again, imagine my annoyance. Just picture a guy shaking his fist at a computer screen because of visceral market reactions due to another guy saying some shit. I replaced stuff with shit. Yes, I did. This is my take as to why this happened. The market was looking for any signal of the slowdown of interest rate hikes Powell hinted at a few rate hikes ago, and it found that in the press release. But when Powell started talking, markets reinterpreted what they just heard, especially because of this comment. Quote, at some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. He was then later asked about lag effects, and Powell dropped the bombshell about it being premature to talk about a rate hike pause. The S&P 500 puked. What's more, the S&P 500 got whipped around even more than Bitcoin, you know, the famously volatile magic internet money. The Fed press release came at 2 p.m. Eastern, and the S&P's gain peaked at 0.7% about half an hour later, but it ended the day drawn down by 2.3%. Meanwhile, Bitcoin peaked at a post-Fed press release gain of 1.3% and ended with a 1.5% loss. Volatility has a specific definition, and 2 weeks is hardly statistically significant, but this marks the second week in a row when Bitcoin's relative stability showed the stock market who the adult in the room was. There we go. The audit was. Bitcoin isn't volatile anymore. Is it high time we throw out all our models? I've been waiting a long time to write this and actually mean it from a market's perspective at least. But Honey Badger really doesn't care. The Honey Badger being an endearing term Bitcoiners use to describe Bitcoin. In the last 2 weeks, we've seen the Fed signal a willingness to keep raising rates to get inflation down, a hot jobs report, and general macroeconomic uncertainty that pushed both the S&P 500 and the NASDAQ 100 and other U.S. stock market proxy down. Meanwhile, Bitcoin rose. I know this could change easily overnight, but for the time being, it looks like Bitcoin is shrugging off the uncertainty. My colleague Glenn Williams Jr. put it best when he said, quote, "The world turns, but the asset often criticized for its volatility has not, or certainly not as much as leading equity indexes this year," end quote. My conclusion is one of two things. Either Bitcoin has now truly arrived as a macro asset, or value is meaningless again since Dogecoin, a cryptocurrency that was quite literally created as a joke, doubled in price in October. And here's the deal. A lot of people look, I got to tell you guys a couple things. First of all, because this is a lot to unpack, right? We talked about it a little bit in the beginning, but I do think we are starting to see Bitcoin mature as a macro asset, specifically as a macro asset that is intended to do something intentional, which is act as a reserve currency against, basically other fiat currencies and other assets. And I think we're starting to see that play out. I think we are seeing it hold a lot closer to its traditional halving cycle than anybody could have predicted, right? Especially in the current market, and especially over the past 6 months as it's traded sideways for such a long time. And I do think that that is an overall net positive for cryptocurrency in general. But we also have to talk about the elephant in the room, which is the Dogecoin statement that he makes here. And the thing is that the idea is that value is meaningless again. And I think that what he's referring to, of course, is the value that was basically spurred on by a huge influx of the stimulus checks during the lockdown period when people were out of work or working from home, etc. And the thing about that is that obviously did make the value, basically make value meaningless to a certain extent. And people had a lot of disposable income, and that disposable income, a lot of it was being put into a cryptocurrency market with intention of making more money. And that is why we saw basically the FOMO surrounding cryptocurrency in general. And of course, those huge spikes. And I think that is going to be a very unique position for cryptocurrency over its history that we will look back on and say, wow, that was pretty crazy. But as it sits right now, I would still just hold on to that halving cycle in general and be waiting for the next halving of Bitcoin. That being said, if we talk about Dogecoin in general, everybody does like to say that it is, was created as a joke, therefore it's always a joke and always a meme. However, if you look at Dogecoin and its inflation rate, as well as basically its transactional capabilities, Dogecoin does have a position to be basically taken more seriously as a transaction currency than anything else currently available, at least until we see something like Caspa come into fruition with high transactions per second, or Ghost DAG, whoever deploys a successful version, full version of Ghost DAG, right? And DAG Knight, which could be Caspa, it could be somebody else completely, right? That's pretty much what we're waiting on. But until then, I think that Dogecoin should be taken a lot more seriously than maybe it is right now. That being said, talking about GPUs, we do have some GPU news coming from video cards, and we have a leak of the RTX 4080 benchmarks. Hardware leaker Megasize GPU, who has an excellent track record for recently, is now the first to share RTX 4080 3D Mark scores from TimeSpy's tests. The leaker has TimeSpy and TimeSpy Extreme scores respectively at 14,718 and 28,599 graphics points. This is more or less of what was expected from this card based on previous leaks and official gaming performance data. Since the Megasize GPU posted full screenshots from the 3D Mark test, we also get a glimpse on the real-world GPU clocks. Here's a reminder that the 4080 has nearly the same boost clock as the 4090, 2508 MHz versus the 2520 MHz, which is probably why we are seeing similar near 3 GHz clock during this test. However, the card tested is most likely a factory overclocked variant, as the leakers shared pictures of Inno3D's RTX 4080 iChill X3 packaging earlier. Such 3D Mark TimeSpy scores put the card higher than Geekbench tests. We are looking at 51% to 54% higher performance than the RTX 3080 12GB model, which had more cores than the 10GB. Alternatively, RTX 4080 is 32% faster than the 3090 Ti in both presets. The RTX 4090 appears to be 36% faster than the 4080 in Extreme 4K preset. So there you go. It is looking like it will be significantly faster. Keep in mind, it is getting a cut down memory bus. Let's go ahead and confirm that down here as well. So what are we looking at? Yeah, we are looking at a 256-bit bus. Remember, the 3080 had a 320-bit bus. So seeing this GPU Power Z to confirm that means that really, like, from the memory intensive mining algorithm perspective, my assumption will be that, of course, the RTX 3080 would be a better purchase than the RTX 4080. But to expand upon that, if you were going to be mining basically a core intensive algorithm, say like Caspa, you would want to be on a 4080. That being said, of course, core intensive algorithms are no match or make GPUs no match for, of course, ASICs and FPGAs. And we have in the rumor mill ASICs coming for Caspa and FPGAs already on the network. So if you were planning on, running a 4090, which was really doing fantastic on Caspa, and running that, you're not going to, even a 4090 is not going to compete with the new ASICs that are coming out. I will be keeping an eye on when those rumors come into fruition, though, and let you guys know. My assumption would be that recent spike in the hash rate on Caspa was probably not due to as much FPGAs as it was probably more due to testing of the ASICs on the network. But we'll have to wait and see what happens, right? And it is possible that that is coming because OBTC has been out for quite a time longer, and that had heavy hash available. So basically, it's a modified heavy hash for Caspa. So we're sitting back and kind of waiting and seeing what's going to happen. For announcements, though, we do have just a quick announcement for you guys. Crazy Pool has added Zilliqa. So if you were interested in mining Zilliqa and you wanted to mine on Crazy Pool, it is available now on Crazy Pool. So there you go as far as that's concerned. Let's get into mining profitability and, of course, questions and answers, etc. right after a word from today's sponsor. And I want to thank everybody that showed up today. Make sure that you be the notification, share the stream out with your friends and family and anybody that is interested in cryptocurrency. And we're going to continue on.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
And welcome back, ladies and gentlemen, boys and girls. Check out the affiliate link down below for Octominer if you're interested in purchasing an Octominer for yourself. Now, if you guys aren't aware, over the past week, I've had pretty much, well, here's the deal. Past month's been really, really, really rough. The past 3 months been pretty rough. And then, the past week has been, well, if you want to watch somebody hit bottom, have fun watching the channel. We've hit bottom. We're done. That's about all I can tell you. I got more details on Twitch and stuff. If you guys want to talk to me over there. That being said, as far as it pertains to the cryptocurrency mining farm, we had our power shut off. We had a lightning storm take out our router. It's been an absolute nightmare out here. And right now it's actually pouring rain, so I'm hoping it doesn't get any worse. But that's kind of, and then yesterday we had some more kind of intermittent stuff going on with the miners. So you can see here, we've been mining some Palm coins solo. We just have our 2 test rigs on here. I'm not going to turn anything more on than my test rigs. And the reason they're on Palm coin is because we were just doing some research on Palm coins. So, yeah, we're at rock bottom mining the Palm coin, boys. That is, that is what we're doing. So it is what it is. We got this going right now. And then of course I did turn on all the Dogecoin miners as well. So, those are mining as well. They're up and running. And then we've just had some weird networking stuff that I've had to get figured out at the farm. As far as, I guess for the past 24 hours, we've only hit like 9 palm. It does say over the past month, we've done 361 palm, but that's it. That's worth like 2 cents according to this. So, yeah. Oh, Lordy. Oh, Lordy. So, let's talk about RTX 3090 on what to mine with corrected ZIL hash, Kapow, ProgPal, and Firo proof of work hash rates at 10 cents a kilowatt hour. You were losing the least amount of money on Conceal at 21 cents a day loss after power. Ergo coming in second there at 23 cents a day loss after power. Neoxa and Bitcoin Z both here at 25 cents a day. Got to scroll down a little bit further to get to our staples like Flux, which is losing 27 cents a day after power. Caspa losing 34 cents a day after power on the RTX 3090, and Ethereum Classic losing 40 cents a day after power, or 45 cents or 44 cents. There we go. I can read 44 cents a day after power. Now, let's look at the cryptocurrency hash rates. Like we were talking about earlier, Bitcoin's had a pretty big, significant pump in hash rate. It is cooling down outside. A lot of miners are in Texas. You're at 277 exahash a second on the network. It did have that 7-day pump, but it's only kind of averaged out to 0.8% or 0.8% over the past 7 days, because we did get over 21,000. It's dropped back down below 21,000 to 20,741 today. A lot of that probably has to do with people trying to liquidate out of FTX as well, so keep that in mind. We'll kind of have to take it with a grain of salt, I think, right now. And that means that everything else that is pumping up in relation to Bitcoin, you want to kind of take with a grain of salt too, because what we're seeing, just like to be clear, is that we're seeing people trying to liquidate Bitcoin out of FTX, and that's going to hurt the average price of Bitcoin overall, right? It's because Bitcoin is the massive mover, right, at this time. So just kind of pay attention, but don't freak out. 160 terahash a second on Ethereum Classic. Hasn't really moved much, and it's up 3% over the past 7 days. Ethereum proof of work is down 11% over the past 7 days and is at 35 terahash a second. And Ethereum Fair is at 4.59 terahash a second and has lost 5.4% over the past 4 days. Ethereum proof of work, did have an announcement. Son of a biscuit. Give me 1 second, guys. Just looking at that, I think I remember that we had an announcement. Yeah. So I just wanted to cover this real quick. Breaking, say hello to the first Oracle network on Ethereum proof of work. So a huge milestone over here. AntLink proof of work is basically out and getting ready for a DeFi in the 2023 summer, I suppose. So I guess there's some sort of weird celebration or a grand opening, they say, at 6 p.m. Pacific time yesterday, or there was. I wasn't there for that. Here's the answer, though. So definitely pay attention as far as that is concerned. There is basically the first Oracle being released on Ethereum proof of work. So something is happening there as far as releases go. Let's take a look at Ergo. And Ergo is still sitting under $1 or $2 per, but it is up 2.29% over the past 7 days. It's at 42 terahash a second. Really not a ton of movement there, but we do see a movement here recently in the difficulty coming back up. And Flux, one of our favorites, of course, to check every day, is down 10% over the past 7 days and is at 7.5 mega solutions a second. And then finally, Ravencoin, going to be at a 5.5% loss over the past 7 days and at 14.91 terahash a second. Basically making, as far as the best performer goes, I think Ethereum Classic or Ergo. So Ethereum Classic at 3% up and Ergo at 2.29% up over the past 7 days. And taking a look at ASIC miners, of course, the Antminer L7 is still in first place with that difficulty adjustment, though, because obviously, I guess we need to start doing this too, huh? Because this is going to be extremely relevant. We're going to start adding Dogecoin difficulty checks, right? So you can see it's kind of all over the place, but 485 terahash a second. Over the past 7 days, it's gone up from 451. So 30 more terahash has been added onto the network over the past week on Dogecoin. If we compared that to Litecoin, though, so 485, right? Or let's say 584. Anyways, somewhere between there. See how close it is. Pretty close to Litecoin, right? Litecoin did have a huge pump at 23% over the past 7 days, but 581 terahash a second on the network there. 584 terahash a second on the network here on Dogecoin. So pretty much, like I said, like we assumed would be the case, is that you got Dogecoin and Litecoin pretty much like at the same hash rates, right? That difficulty is bringing that price of the, bringing that amount per day earned on the Antminer L7 down about $4.15. We were over $30 last week. In second place is the Antminer D7, mining that Dash coin for $8.81 a day. And then in third place, you got the Jazzminer X4 at $6.72 a day on ETP. And then you got the Goldshell HS3 doing $6.55 a day on Handshake, and the iPolo V1 doing $6.39 a day on ETP. Scrolling down from there and just double checking the Antminer S19 Pro, we are at $1.10 a day on Digibyte, not on Bitcoin, right? So if we went and looked at Bitcoin, you would be at, I think, on Antpool at 17 cents a day after power. So definitely probably want to be looking at the good old savior Digibyte here in that particular case. Let's get into questions and answers for the day. Remember, super chats are never required. Always appreciate first to be answered because they're the easiest to read, and I could definitely use them. Definitely use all the help I could get right now. As I've talked to you guys about, we have lost $6,000 of revenue in the past 28 days. Very quickly due to me being a dummy and not fully reading some contracts along with some other stuff. So that is all on me. Yes. But we're working through it. I could use a little help. And then if you guys want to check out Locals, you can check out Locals and help support me over there. So we got a $20 super chat with the arms from Carlos Marcelo. Thank you, good sir, for that $20. $20. Digital Fortress Mining says, hey man, good morning. Good to see you on. It's good to see you here. Thanks for stopping by. And Chili Mining from Octominer, who is the sponsor for today's show. Make sure you check out the link down below. And good to see you, Chili. Thanks for stopping in. Bojangle says, Asamatech Caspa ASIC is being released later this November. And it is rumored, I couldn't find the leak, but we'll try to find the link for you guys. Says it is rumored to be, or at least right now, he's saying it's going to be 10 gigahash a second at 450 watts for $5,000. I guess in comparison, you're looking at 1 gigahash a second on a 3090. So that would be crazy. Chili Mining coming in with a huge $100 super chat. Thank you, good sir. Says, love you, man. Love you too, man. Thanks for that. Going to be super helpful right now. That'll be more than everything else we'll make today. Just your one donation. So thank you, good sir. Adam BW says, Asamatech, any thoughts on the Osprey Electronics E300 for Caspa? Well, that's what we were just talking about, right? So obviously, I'd love to get one. I don't know how we're going to get one, but we'll try to get one. I guess you could pre-order one right now. It looks like. I don't know if we can trust it. I've never heard of it. I guess I could do a firm. Try to do a firm. What is it? What is the Aquatine Hunger Force? The bank won't give me a loan because they say I'm a liability and I don't pay my bills on time. They say I'm a liability and I don't pay my bills on time. Oh, so you can pre-order the E300 14 gigahash a second is what it's saying here. I've never heard of Osprey personally. So I'd probably have to default to, you know, what they got at ECU 50 with Bitstream. So that would have been the FPGA. They got a hotspot miner. We have a couple more super chats. We got a $2 from Jerethias. Thank you for that $2 super chat. Says, are you excited to test the 7900 XTX mining? Yeah, I just got to figure out how to source it, but that's going to come out in December, correct? But I am super stoked for the 7900 XTX, yes. And then we had a ZAR 350 set from Janny. Thank you. Says that's huge. Says, hi, Matt. Just want to say thanks for the fantastic show and good luck. Thank you, good sir. And Chadwick says, $5, only one direction to go. Once you hit the bottom, that's up. I guess we could technically hit the bottom worse, which we'll actually find out here in a couple days because they're threatening to shut the power off again at the farm. But I will let you guys know how that goes. Now we're living out here, so we got to figure that out. Before, to be honest, because it's like because there's basically, how do I explain it? So I have a power agreement for certain power costs, and then I was going through essentially to litigate and like be like, hey, I'm not paying this additional fee that they started tacking on. But now I'm in a position where I'm going to live here, so I got to just catch up on the power, pay all of the fees, which I think I have like $2,600 left in fees to pay before the 14th, which I don't have the money for, but I'll figure it out. And then if I do, because I'm going to be living here. So yeah, it's a rough week. So thanks everybody for all this. Snarks, thank you for the $100 Canadian. Says, keep on rocking the freehold. Thank you, good sir. Ulysses says, at Tech, what is the PC case behind you? That is, so this is my test bench. And it's always been in the background, but this is just a Praxis wet bench. I have two of them. My AMD rig, the Intel GPUs on here, and right after this show, we're going to be headed on over to Twitch to test the 750 in Caspa and I think Radiant and a couple other algorithms. So there you go. Mm-hmm. Jeff Christ says, did you read the Osprey miner description? It says it will support future mining algorithm Ergo. Yeah, a lot of this doesn't make any sense to me. I was hearing basically what do you call it? Rumors as well about an Ergo miner too. So I don't know. It's weird that it says affirm, but crypto accepted. Please. Okay. Never mind. Anyways, weird. This one's really weird. This one's really, really weird. We'll have to see how it pans out. So that's going to wrap up the show over here on YouTube for today. We're going to head on over to twitch.tv/blindrun, where we are going to be testing out the A750 and the new algorithms that are supported. And we'll be doing that till about 1:45 p.m. And then I do have a meeting at 2 p.m. That we'll have to hop off for. So see you guys over on Twitch here in just a second. And I want to say thank you everybody for all the support over here. Let me get you the link to Twitch. And then we're just going to hang out on Twitch for a couple hours. It's a lot more chill. I will take a break for bio and so on before we get going all the way. But There we go. Get this all set up. That'll do it. Here's the update over there. And I hope to see you guys over on Twitch. Just a second.